Well, hello again, traders. So this is the third video of what my setups look like and how I take my trades. So we're still focusing on levels. Obviously, price action levels are the key element to this, but I use a number of other elements. So last video I showed you how I use Ichimoku Cloud, and now what I'm going to do is just touch on the Bill Williams formula, methodology, strategy. It's a very simple, easy to use strategy which has a high probability. And yeah, again, I use this really for confirmation. I don't trade the strategy as my own mechanism. Price action to me is still key before I do anything else. And the Bill Williams strategy, as well as the Ichimoku Cloud, will either allow me to add trades to a winning setup, or to get out of trades when I see we are ranging or it looks like we're going to be turning around. So again, what I have on this chart is a couple of things. So firstly is the dotted purple line again is the 200 EMA. I have the Bill Williams Alligator, which is the dark blue line over here, red line, and the green line. These are essentially moving averages. Okay, if you don't have the Bill Williams Alligator on your trading platform, you can set it up. So basically, it's a smooth moving average of 13, 5, and 8. Okay, and then all you're doing with the moving averages is that you are shifting them horizontal shifts into the future. So the 13 is shifted 8 periods ahead, the 5 is shifted 3 periods ahead, and the 8 is shifted 5 periods ahead. Excuse me. So all that does is it gives, so if you look where price is here, I've got a line. So there's price at the moment, but you can see the moving averages are extending past price and giving you an indication of what direction this market's going in. So again, I'm still on the DAX, so I'm just using the DAX across all three videos just so we've got some continuity. And the other element that we see here is these purple lines here. That's just simply a normal Bollinger Band. Okay. Now, I've always been a fan of Bollinger Band because it gives me a lot of confidence in picking when we're getting a turn, especially the Bollinger Ws like we have a setup here. These three here, and how price rejects levels and the Bollinger level also lines up with it. This gives me added confidence. Okay, so Bill Williams. What does Bill Williams say? Well, let's just look at this area here. So essentially, what you see happening with price tends to follow this blue moving average here. And your blue one is the 13 period moving average there, okay? And then your 8 is the red, and then the green is the 5. So the higher moving average at the top. So what typically happens, you can see how price uses this as a level. You see there? You see there? Now, if I, again, as I said, on top of, let's see, on this tail here, this candle's tail, I've got a line in. Let's put another one in there. Okay, so this one here looks like a pretty strong level. If you look to the left, you can see how price is reacting around it. Okay, and you can see how it almost coincides with the blue line here, but it gets rejected. So price is rejected at this point, rejects off the blue line. So the principle is quite simple. Is when you break below the blue line and it comes back to retest, probability is we are moving to the downside. Okay, and you can see how we move to the downside. Okay, the other thing is when we get too far away from these moving averages, so and I think Bill Williams refers to it as diversions. So what he says is from the point where price intersects with the moving average, if I draw a line along there, so kind of roughly on this red line, so it kind of roughly follows the direction of the red line, and then I draw a line from the same point that I follow price, you can see we have a divergence. So there's quite a big gap from there to there. And normally what that happens is indicated there's not a turn, but it could be a bounce coming, or it's going to come back to at least test one of these moving averages. Okay, so where that's helpful is when you have a big move down like this, you've got big candles like this. And obviously, you would have a level in. You have to go quite far back for this one. Okay, this was the big drop in the US market. So you can see there's a level, there's another level. That one in as well. So I've got 1, 2, 3, 4. Okay, so we come back to this area here. You can see how we had a rapid move down. The question is, we're getting far away from the moving averages, so the probability is there will be a bounce of some sort, which there was. Okay, so it basically touched all three of those levels before it turned. And I think the real problem with this one was that's a 205 point between those three levels, which is massive. Okay, so you can see how price dropped, it then came back to test, and it'll either test the lower moving averages or the middle or the blue line. So it just gives you an indication that when we are below the alligator, your price is moving down. When the alligator is doing this, Bill Williams refers to it as sleeping. So in other words, we're ranging. Okay, we break through again, and you can see right there is a bearish signal bar, that pin bar there, and below the moving averages, and they're all crossing over to start pointing down. We're moving down. Okay, so if we just come back to real time today, so in the last video we saw how many bullish signals are here. I mean, 1, 2, 3, still we have 3 here, 4. We've got a number of bullish signals here. You can see how price came up to the blue line there. Okay, it rejected, came back down, found some support, created a higher low, and now we've broken through the blue line. And what I'm expecting to happen is that price comes back to test these moving averages. If that test holds and starts moving up, then we are looking for longs. And where am I looking for longs? Will be on price action levels. And there are a couple of areas that I will be looking for. So the first one, most logical one, is there, top of this pin bar, because we haven't tested it again yet. We've had a few coming close to it, but we haven't tested it. The next one is basically the top of this pin bar, because again, we haven't tested this. We've gone past it. We haven't come back to test this environment. And then the bigger one here will be the top of this long tail here, because there's quite a bit happening at this level. Okay, that'll either be there, and last one will be the top of this candle there, because that essentially was the previous high of this period. So if I was to say that this area here was a range, which is basically what it was, prices going sideways, and this candle here was a breakout of the range. So the higher probability is going to be, let's just put a block in here, the higher probability is going to be somewhere in this area here. Okay, then there is another thing which is on this chart as well. You'll see that the weekly close, weekly high, I have the open of the week and the low of the week also on the chart, as well as pivots. So I have weekly, daily, and monthly pivots on this chart. And again, those are all levels. So you can really see I'm looking for, on the DAX for next week, I'm looking for a long that I'm looking in this area here. So you can see how the top of this tail lines up with the daily pivot. That could be an entry. I would prefer to get in at this level, okay? And I'd even prefer us to just tag the weekly pivots, so the weekly pivots tag, so that we can move from there. So there's a couple of things I'll be looking. So price action levels there, I'm looking at the pivot, and then I'm also looking at where we are in relationship to the alligator. So if we're going to come back into the red and blue moving averages of the alligator, that would be ideal, okay? And then obviously if we just drag in the itchy cloud, let's get back off onto 4 hour, we can see from an ichimoku perspective, we've had a crossover as we discussed in the last video. We've got a cloud, well, it's not quite a breakthrough yet, but it is trying to break through at the moment, and we have a level breakout. So ideally, it would come back, test this level, which would also line up with Kijun-sen. You see that? So let me just show you how let me just use this line. So I will make that line blue because that is Kijun-sen, okay? And then this line here, just move it onto there, and copy that, and I'll make that into red for my Kijun-sen line, okay? And then let's just move that out the way. And now we can see, so there's the red line, Kijun-sen, and where's our green line? What did I do with blue? Sorry about that. So yeah, so the top of the range lines up with Kijun-sen. So again, this is a high probability area of where I'm expecting a reversal to take place. So the test of the break from price action perspective, it is close to the weekly pivot, so it may just pop down to here. It's also within the alligator as well, okay? And you can see there's quite a few tails that it can actually tag at the moment. So there is a high probability that we can get an entry in at this level. So let's say we're looking for that. That's quite a big stop loss. So ideally I'd probably wait just to see where we're going to go to. Because on the account that I've got, I'm looking for a 500 Rand, or basically a 40, probably around 35 to 40 pip stop loss on the DAX in order for it to be within my risk parameters. So yeah, but there's definitely something brewing at this level. And again, this is probably an area where I may just drill down to an hour if I've got time to watch the chart for a bit to see where my entry will be. But it's definitely something to watch and pay some attention to, because I think I have a feeling the bulls are going to start stepping into global markets pretty soon. Okay, the last thing that you see on this chart is the awesome oscillator, which is also a Bill Williams oscillator. So how I work with this is come back down to so how I work with this is I use this almost it's not really divergent, but if I have a higher low like we have here, and you can see prices come back and then we sort of start going green again, momentum is to the upside, there's a good probability for an upward trade here. Okay, and obviously then my exit is based on price action. So this area here as well, which is another reason. So this whole range where I've drawn this block, if you look here, we've got a higher low, and we're gradually moving back to the zero, and then we've broken through the zero. So to me, this is a signal that we have a double bottom in place. So this is a awesome oscillator double bottom. We do have a price action double bottom there. We've got a lot of tails over here. So there's a lot of bullish action here. This is showing bullish. We've got diversion. So there's so much happening on this level across all the different charts that we're looking at. that it just shows you that there is a high probability of a trade here. So that kind of sums up how I use the chart. I think, sorry, there's one thing that I haven't mentioned, which is fractals. So fractals are amazing. There's no other word for it. So I well advise you to spend some time researching fractals and understanding how to pinpoint them. So some of the charting packages actually draw them out for you, which is great. Pro Real Time that I'm using doesn't really draw them out for you. You've got to code the indicator yourself. And yeah, I'm not quite happy with the way you can code it on Pro Real Time, so I rather just pay. I know how to look for them, so I just utilize my brain more than anything else. So a fractal, and I'll use a triangle here for you, is basically, so inside that triangle is a fractal. So what happens is you've got a high, and then on the left you've got a low. So there I've got a low, an equal low, but then another low. I'm looking for at least 2 bars of a low on this side. So if I don't have, so there I don't have a low, but this one's a low. So you can see there's a low, there's the tail, the top tail, which is a low. I'm not worried about, sorry, the highs, not lows. I'm not worried about the bottom of the bars. I'm only worried about the top of the bars. Okay, and on the right-hand side, exactly the same thing. So there's a high, there's a lower high. So there is my fractal. Okay. So what happens is when that fractal breaks, I'll put a line on top of that fractal, you can see it was tested, then it broke. So a lot of people will trade that break, and then their stop loss is below the previous fractal, which is this one over here. So if we draw a triangle here, like that, this is the fractal to the downside. You can see there's the low, that is a higher low, higher low, higher low, and that bar is a higher low. So there's 5 candles that make up the fractal. So there can be more than 5 candles making up the fractal. But for example, this one here is not a fractal. No, actually it is, sorry. So there's the low, there's a low, there's a low. So this is a fractal as well. This one here was a fractal as well. So this bottom here was a fractal. That's a fractal. This one here was a fractal. The top of this bar is a fractal. And you can see it breaks, comes back to test the fractal, and then carries on. So the fractal is essentially, it just gives you an indication that a new high or a new low has been put in place. And obviously the minute that gets broken, then price is normally heading in the direction of the break. So I will use fractals just for, again, for confirmation. I don't like trading the break of them because my stop is way too far away from my liking. So if I had to trade this fractal here, a break to the upside, then my stop should be down here somewhere. So I mean, that's 500 points. It's just no ways I'm going to take that trade. Okay, but it does help you just to make sure that you're on the right track. So what I will do is I will use price action. So there's a test on this bar here. There's a test in that area, and a downward fractional is formed, which just gives me confidence that I've made the right decision to trade along, because we came back to test this previous break. Okay, so so that's kind of the summary. So just remember, every time I see a tail like this one over here, I have a line drawn in. There's another tail, and you can move that right onto that tail, and you can see how price reacts around that tail. Okay, and obviously just move that one up to there. So this low, that low there, will be retested. That is a given, and here you can see it's being retested. So if it breaks up above it, we've got a better probability of it going up. If this retest fails and it moves down, then so be it. But obviously markets aren't open today, so we'll have to wait and see what happens tomorrow. But yes, guys, that's pretty much how I use it, and I hope that helps. The next couple of videos from here on will be about setups and during the setups, I'll run through both chart layouts that I've got, so the Ichimoku and the Bill Williams, and you'll see why I make a decision to take a specific trade, and I'll be able to show you my entries, my exits, and my targets. Anyway, enjoy the day. Catch up with you guys later. Cheerio.